Imagine knowing the exact moment when a market reversal, retracement, or big move is going to happen. How much easier would it be to manage your positions with that level of clarity? Well, you're in luck because that's exactly what I'm going to show you in today's video. I'll break down expansion, consolidation, retracement, and reversal, explaining their meanings, the timing of each, and how you can identify them in the market. But listen closely, don't skip a second of this video. Every detail matters if you want to master market timing and improve your trading strategy. And if this video adds value to your trading, make sure to like, share, and subscribe for more content like this. Let's get started. What happens in the market at what time? I will tell you everything according to New York Standard Time. From whichever country you are, you can match it according to your time. If you're from Paris, London, Dubai, or India, you can manage the timing accordingly. First, the new day candle starts. Its timing is from 5 p.m. to 12 midnight, as per New York time. This is called the Asian session. It involves consolidation. Then the market makes a move. Its timing is from 12 midnight to 3 a.m. New York time. This is called the Judas swing, meaning a fake swing. It involves manipulation. Then, at 3 a.m., London starts. And from 3 a.m. to 5 a.m., the London Open kill zone takes place. Here, reversal occurs. The manipulation that happened from midnight to 3 a.m. reverses in the London Open kill zone. This means if Judas swing was up, London goes down, and if Judas swing was down, London goes up. Here, the reversal happens. By 5 a.m., the London Open kill zone ends, and the market goes into consolidation again. From 5 a.m. to 8 a.m. New York time, this is pre-New York. Here, the market consolidates. After this, at 8 a.m., New York starts. New York opens from 8 to 8:30 a.m. Here, retracement happens. The move made in London is retraced in this half hour. Then the New York kill zone opens and makes its move. Its timing is from 8:30 a.m. to 11 a.m. This is called the New York Open kill zone. Here, either reversal or expansion happens. If the London move was down, either it reverses here or goes up in New York, or it further expands, meaning New York also continues the downside. This depends on your bias and setup, whether you are bullish or bearish on New York for the day. Then, at 11 a.m., the London close kill zone opens. Its timing is from 11 a.m. to 12 noon. This is called the London close zone. And here reversal happens. The move made in New York reverses in the London close kill zone in this 1 hour. After the London close kill zone, the market goes into consolidation again. And this timing is from 12 noon to 5 p.m. For the rest of the day, the market remains in consolidation. This is the movement of a one-day candle. A one-day candle moves like this. You can see many setups of ICT here, ICT's Silver Bullet, ICT's Turtle Soup, ICT's Market Maker Model, and ICT's Power of 3. This is the Interbank price delivery algorithm. All right, traders, here's something exciting for you. I'm hosting a special giveaway to thank you all for your amazing support. I recently grabbed some TradingView subscriptions during the cyber sale, and I'll be giving away 3 of them to lucky winners. Here's how you can enter. Subscribe to this channel, like this video, comment below with the word done. It's that simple. The giveaway ends at the end of this year, and I'll be announcing the winners on New Year's Eve. Don't miss your chance. Get your entry in now. Best of luck. Guys, now let's look at examples of the Interbank price delivery algorithm. Here we have the daily candle start. What happened here? Midnight arrived. So what do we have now? The entire Asia session. This will be marked as consolidation. Here we have all the consolidation. Now it is time for Judas swing, manipulation. Let's see which side the manipulation comes from. Here at 12 midnight, it's 3 a.m., which means London has started. Here we have the Judas swing from here to here. I'll mark it in red. Now what do we want? We want London to go down because manipulation has been to the upside. Consolidation is done, manipulation is done. Now London is going down. Let's see what move London gives. Here, what did London do? From 3 a.m. to 5 a.m. was the London Open kill zone. London gave its downward move. Here we have it. London consolidation, Judas swing, London. Now it is time for pre-New York consolidation. Let's see what the market does. Here we needed consolidation. So what happened? We have consolidation here. The market goes up, then down, then up again, not giving money to buyers or sellers. Here we have a consolidation. Asian range, Judas swing, London open kill zone, consolidation. Now New York has opened. What is New York's role? Either go up or go down or reverse or expand. Let's see what New York does. What did New York do? New York gave its downward move expansion. Here, New York has expanded. Now it is time for the London close kill zone. Where should the London close kill zone go? It should go up because New York has gone down. Here you go. The London close kill zone also went up and swept New York's liquidity. And now consolidation will start for the rest of the day. Guys, this is how it works. It takes a lot of time to make videos, script writing, animations, voiceover, editing, etc. These things are not easy. What do I need from you all? Just one subscribe and like. And if you like my content, kindly share it too. Let's get back to the video. If you want to learn Interbank price delivery algorithm, you must know some basics first. What is an algorithm? An algorithm is a set of instructions that are followed in order to complete a task or solve a problem. In simple words, you can understand an algorithm as coding. Just like the coding of a computer program, the program runs based on that coding. Similarly, the market also has coding, which we call an algorithm. 90% of the market is handled by artificial intelligence, which runs on algorithms. As AI becomes stronger, algorithms in the market are also getting stronger. The algorithm knows where your stop loss is. It knows whether there are more sellers in the market or more buyers whose stop loss needs to be hunted and how it should be done. The algorithm creates inducement. If you don't know about inducement, there's a link to my inducement video above. You can watch it after this video. There are 4 factors in the Interbank price delivery algorithm: consolidation, expansion, retracement, and reversal. Let's first understand consolidation. When price trades within a range, here's the market. We draw one line above and one below. If you observe, the market has traded within a range. This means there are sellers' orders above and buyers' orders below. Liquidity is present both above and below. If you don't know about liquidity, I've created an advanced video on liquidity. You can watch it after this one. Trust me, it's worth it. Now, what is consolidation? When the market trades within a range and doesn't break out of it, that is called consolidation. What is the purpose of consolidation? The purpose of consolidation is to collect orders to generate liquidity in the market. Consolidation is very important for the market. Now, let's look at an example of consolidation. Here, the market made a high, I'll mark it. Then the market made a low, I'll mark that too. Now the market should stay within this range, so it will consolidate. You see, from here, the market took support, then again, it took support at this zone. And from the top, the market is also taking resistance. This is consolidation. The market is building orders on both sides of the range. Expansion. The most important, a strong and sudden move in price, either up or down, is called expansion. There is one major rule about it. Kindly make sure you have a notebook and a pen with you. There is an interesting relationship between consolidation and expansion. What is that relationship? After consolidation, there is an expansion. Whenever there is consolidation in the market, a big move always follows. After that, the market expands. The market does not reverse after consolidation. The market does not retrace after consolidation. Whenever you see consolidation in the market, understand that orders are being built there and a big move is about to happen. At this point, you cannot gamble on whether it will go up or down. I'll show you an example. Here is the market. Now, if you observe, the market is in consolidation. We draw a line above and a line below. A range is formed. What did the market do? Above, we have sell orders, and below, we have buy orders. This means there is liquidity both above and below. Now, what will the market do? The market broke out upward. Above, it grabbed the seller's orders. This is an example of a bullish bias in the market. The market dropped downward. It broke out of the lower line and grabbed the buyer's orders. Sellers are now in profit. Buyers' limits were wiped out. Then the market went boom. This was a bullish bias. The market was bullish. First, it picked the seller's orders, then trapped them, and then gave a boom move. This big move, the largest leg, is expansion. We also call it displacement. And this is what we focus on. This is what we aim to capture in the market to make money or lose money on. Guys, now let's look at an example of expansion. Here, the market was consolidating, Then it broke its range and showed expansion. This is our displacement, or you can call it expansion. In the market, two things remain. Either retracement will follow expansion or there will be reversal. Let's first understand retracement. A minor pullback after expansion is called a retracement. Let me give you an example. Here we have the market. The market was in an uptrend. This is our expansion, but the minor pullback that happened between is our retracement. Then there was another expansion, and again we had a retracement. Now let's look at an example of retracement. Previously, the market was in a downtrend. In the downtrend during expansion, a minor pullback occurred, that is retracement. Let's look at one more example. Again, the market gave a minor pullback and then continued in its trend. This too was a retracement. What is a reversal? A change in the price direction of an asset. Here we have the market. There was consolidation, then expansion, followed by retracement, then another expansion, then retracement, and another expansion and retracement. But this retracement was not just a retracement, it was a smart money reversal. What does reversal mean here? Smart money reversal. Here the market structure shifted. Why? Because a high-low was broken here. The market structure shifted at this point. Then the market shifted into a downtrend. This is where we got a reversal. Now let's see an example of a reversal. Here is the market in a downtrend. The market structure shifted here. This means the trend has now changed. From here, a reversal will occur. Why did it happen here and not earlier? Because this leg broke the low. Now, if you observe, this leg broke this low, but this leg didn't break anything. It didn't even violate this low. That's why we'll consider it a lower high. It's here that the market structure shifted. Now we can expect the market to move upwards. Here, the market has shifted into an uptrend. This was an example of reversal. The market started and the time in the market reached midnight. This means we are in the Asian range. What did the Asian range do? Consolidation. At midnight, what starts? Judas swing. We'll see whether it goes up or down. Based on that, we'll trade London. Here we have the Judas swing. So which side did the Judas swing occur? It went to the downside, meaning manipulation happened on the downside. So what will London do? London will go up. London went, but it didn't give a strong move. Still, it moved upwards after the Judas swing. The rest will be completed by New York. When London doesn't give a move, it means New York will bring a big move. Here we see London moving opposite the Judas swing from the Asian range. Now, the London Open begins. Pre-New York timing from 5 to 8, we expect consolidation here. Now it's 8. Around this time, the market remains in a range and gives us consolidation. It hasn't given a big move yet. Now, what do we need? From 8 to 8:30, we need a retracement. 2 candles of retracement. What do we see? 1 candle, 2 candles. A retracement has occurred. Retracement came on the downside. What does this mean? It means New York might move to the upside. What is retracement? Retracement occurs in the opposite direction. So this came on the downside. It means New York might move upward. Now we'll look for a setup in New York and take a trade. Here there was consolidation. Manipulation occurred. London didn't give a move. Then consolidation and downside retracement happened. Today, New York might give a big upside move. Let's see what happens. Here, New York gave its move. Now, what will we wait for? We will wait for the London close kill zone to reverse New York a bit. Here, the London close kill zone started. What did it do? Did it reverse? Yes, it reversed. This is our London close kill zone. It completed its work and reversed. Here, you can say that the market will move into consolidation for the rest of the day. This is the Interbank price delivery algorithm. It's such an advanced concept that you can't even imagine. It's very advanced. At the end of the day, you'll remember me and say, yes, this was very advanced and I learned it a long time ago. Guys, I've already uploaded advanced videos on liquidity and inducement. Both are appearing on the screen. You can check them out if you like this video. Subscribe to my channel, share it with your friends, and goodbye.